Why you should not diversify your money. Welcome back to the channel, everybody. I'm Matthew J. Today coming at you with another video about investing your money. If you're new, subscribe to the channel, like the video, and let's get to it. Why you should not diversify your money. All the gurus out there, investment bankers, hedge fund managers, almost everybody is talking about, have always been talking about diversifying your money. And there is some merit to that. It will protect you if your investment you put everything into goes bust. If the economy is crashing, one thing may really fail and then you'll still have something left over to, get back on your feet. But the one thing that upsets me is how these guys do not tell you the most important thing is needing a massive income, or as we'll talk about after, a big net worth. It does not make sense. It's so pointless. If you are making the average salary of $50,000 a year in North America, save $10,000 a year, invested at 8, 10, 12% annual return, it compounds. You have $1 million plus by the time you retire. Even with $100,000 income, you're lucky to save $30,000 a year. Your lifestyle sucks then. You live a crummy life for 30, 40 years. What kind of life is that in general? To attain $1 million plus. And I'm not going to go too much into the whole income spew. I talked about that in my last video. Link is in the description. If you are lucky and invest it well though, and there's no major expenses that come up, which there will be, you'll have $1 million. A million something. $1 million is not much at all. I know it seems like a lot when you have nothing, but once you have it, it's almost worse than having no money at all. It's more stressful once you have to start to have some money in your hands, a couple $100,000, $500,000, $1 million. It's more stressful because you're trying to maintain it always, which is super stressful. You never want your net worth to come down so much, and because it's new levels. It would be amazing to have them when you don't have it, but when you have it, you're that person, you want to maintain that, and then you're trying to maintain that while also trying to increase your lifestyle. I believe at minimum you should not diversify if you make under $200,000 a year or have under $1 million net worth. I've been a full-on investor for over a decade, and every time I put everything into one deal, one business, one stock, one real estate property, when I had to put it all on the line on one thing, they've always been my best investments. And every time I've diversified, because I learned that was, it's the right thing to do. Like, well, you're only in one thing, you need to diversify right now, you should do that. Like, you're an idiot for doing that. It's always either one thing has failed or all of them have failed at that time. Never ever, when you're diversified, almost everything goes and does very well. I hardly ever see that. And so the reason why this happens is when you diversify, you get sloppy. Your decision making gets sloppier. You put in less effort. You put in less focus. You start to do you create stupid patterns for yourself where it's like people do this, like, oh, I have a 10%, I'm going to use 10% into like highly risky investments. Well, why would you do that? That's almost certain to fail. And then you're also just creating, again, bad habits of not doing your due diligence on stuff, Because once you do that with one thing, you may do it with the other thing, and then it may be the one that's a massive deal. So your due diligence comes down, and again, you're not training yourself to how to be a good investor by making sure you make solid decisions. Decision making is so important. So you just don't put in thorough decision making, and this leads to bad performance in your investments. And the same truth applies for multitasking. This makes so much sense to me, all this, and has applied to me throughout life. Is like the first things, like back in the day, what I used to always notice, be annoyed about, is how multitasking does not work. Where when you're trying to listen to someone and do something at the same time, or trying to do two tasks at the same time, you're doing both of them horribly. You're never doing it good. Same with when you're trying to, build skills, and you're going from one skill to the other, trying this, trying that, or building a business, trying this, trying that, giving up, or trying to run two businesses at once. Same with investments. You're trying to juggle all these different investments. Focus is the key for everything. Where when you're doing 5 things at once, or 5 things simultaneously, it doesn't have to be directly all at once, then you're putting in 20% effort for each one. So you're doing each one pretty crappy compared to just focusing on one thing completely, wholeheartedly. So this just affects your outcome and performance. If you look at any successful person, and all these people that even talk about diversification, look at where they made their money. They made their money usually in one business. Their main business made them all their richest, and then they're diversified and doing multiple things. No one's diversifying when they have next to nothing. Everyone's putting everything on the line into one thing and making it happen. Even look, Jeff Bezos. What did he do? He put all of his focus and attention into Amazon. Amazon became the best business because of that. Because he never tried to do other things, put his money into other stuff, sell stock, do anything. He put all of his time, all of his resources, everything into Amazon. And that's why it became so amazing, and he became the richest man in the world. Even Warren Buffett. He's diversified into just several companies in his his fund, his company, but he is still he has every single penny into his fund. Even though it's diversified, it's a diversified, non-diversified way. He has everything into that. That's really not being diversified, because if his business and company fails, or if he is not being great at what he does anymore, all of his capital is good. If that fails, everything fails for him. So, and that's all fund managers, where these billionaire fund managers, they have almost all their money, billions of dollars, in their own fund, and that's putting everything on the line into one thing. As much as that's maybe diversified, that's not being diversified. That's you putting it on the line into one thing. And why? Because they're focused on that. They trust and believe on that so much that they're going to put everything that they have and own into that fund that they have. Why don't they go and buy real estate additionally to that? Why don't they go buy other businesses outside of that? It doesn't make sense. They know their focus needs to be on one thing, and they trust that so much because they can see what the outcome more than likely will be, rather than throwing some money at some other things. If their fund took a dive, they would take huge losses. So, another great analogy is, where do most of the average people make most of their money in life, where they do have some retirement money? They make it with their homes in real estate. Why? Because they're forced to do it to be non-diversified. Most people have all their money almost into their home because they're forced to get a loan, and the cost of living is the most for everybody. They're putting all their money into their home, so they have their nice home and they can live there. And that's where most people end up having like a retirement fund or some money eventually when they retire, because their home, they've had all their money in their home, their house went up over the years, and nothing else made them money, but their house, is worth $1 million, $2 million eventually, and that's their rainy day fund now. They have all their money into that one thing that worked, luckily for them, and that's where they've done well financially. So to make something significant in life, especially with finances and business, you have to have complete focus at it, and with a lot of leverage. It's like, if you look at other rich people, what do? They usually leveraged a lot. They took a huge risk, but it's on one thing that they trust and truly believe in, and then it works out. So it has to work out, obviously, and things can fail. Obviously, things can fail still. It's just because you're so focused and believed in it, and it's an amazing thing, and you put your whole heart in it and believe in it and can see the outcome in some kind of way, obviously you can still fail. But you take that risk if you want to get some substantial returns in life and something actually significant that can actually do something for your life. And it's different for everybody in different markets in the world. Obviously, you can make 50,000 a year and have $1 million eventually if you live in some cheap market and you like a simple life. Whatever. That's if that's what you like, that's what you like. But there's a lot to money than just besides your own selfish needs. That's just my opinion. So, but this is why you should focus on one thing, because you'll make a great decision. Another thing Warren Buffett says is you could be a great investor if you had a punch card, and that punch card is basically you have 10 punches in it, where those are your investments for your whole life. You have 10 decisions you can make for investments in your whole life. Then you're going to make very good decisions and choices with those decisions if you only had 10 of them. When you're doing so many different ones and trying to try all these different things, all these things aren't going to work. You might as well wait for the right opportunity and go hard, go all in on it, leverage, put everything in it, because then you're going to do your due diligence inside and out, focus on it completely, really educate yourself on the topic. Invest in your circle of competence, which means invest in the things you know. Focus, educate, due diligence, good decision-making skills. And another analogy he has is, pro baseball players, batters. When they don't swing, I used to always wonder as a kid, why didn't that baseball, that batter, the guy at bat, why didn't he swing at that pitch? There's a perfect pitch right down the plate. They look like they're all going down the plate. But there's only like 2 or 3 perfect spots where there's a sweet spot for that batter. And he only swings for those, because there's no point of swinging those other ones, wasting your energy or wasting a hit where you get an out on it now because it's a bad hit. You wait for that sweet spot where you can get a home run on it. Same with investing. That's his analogy. You wait for those right opportunities, and then you go more all in on those things instead of diversifying. It's right in the pudding with Warren Buffett. So even if you want to get to higher levels, I said you should do this under $1 million. You should do it under 200K you're making, but this applies even after $1 million if you want to go to the next levels. If you look at people with $100, $200, $3 million net worth, you see where they got there. They got there from a business. They sold a business and made a crazy amount of money. And then they always kind of teeter around the same net worth, go up a little bit, maybe come down. That's because now they're just being diversified. They're diversified and they're just trying to maintain their net worth while, maybe, they're making $10 million a year. They could spend that, grow their net worth a little bit, live on a $5-10 million lifestyle, and they're always have their, their nest egg of 300 million, and can live a lavish lifestyle. Versus if you look at, and that's how like average people are doing it. They have 50,000, 100,000, 200,000 net income, $500,000 net worth, diversified. You just stay there or you come down and your life's horrible. Versus Elon Musk, and this is just an example of like, you know, you got to be aggressive to continue to grow substantially, continue to perform well, and aggressive as in, you know, going more all in on one thing, doing like one thing at a time, or, you know, just one or two things and really focusing on those things. Elon Musk, he made $100 million or whatever it was, a couple $100 million, and then threw them all into new businesses again. That's how he got to billionaire so quickly, so fast. Where most people who get to those $100 million marks and stuff, they don't do that. They want to keep that. They start to become scarcity with a whole lot of money. But, you know, most people that are like $500,000, $1 million, $2 million, they get scarcity, and your life's the same. As much as everyone thinks $1 million a lot, your life's going to be pretty much the same. So you still got to go hard. You still got to go and put those things in aggressive assets. Put it into one great thing that you know all about, that you truly know, it's your circle of competence, and go all out in it. So that's my reason why you should not diversify. I think this is a great video. I think I hope this resonates with a lot of you, and let me know what you think in the comments below. You know, I want to perform. I want to have some great things in life. I want to do a lot of things for people, and you got one life. I want to live a great life. So that's my reason on doing that. Let me know in the comments section, and don't diversify your money.